Happy Thursday, traders. This is Tanner with Charting Options. Today is Today is January 6th. It is 2022. It is not 2021 anymore. Uh, so I am here to discuss today's day trade ideas. We had three different day trade ideas from PayPal, SPY, SPY, being our ETF, and then Trade Desk, TTD. A bit of some very quiet action, broadly speaking, today, but PayPal did trigger the upside, provide a really good trade. SPY triggered to both sides and failed both sides. We'll talk about that. And TTD provided a trade to the downside, albeit quick and more of a scalp as it triggered down early this morning. So we'll go over the rationale behind the levels to the upside and the downside. We'll talk about how price unfolded today, and we'll mark up the charts together if warranted. I lied there. I do have, this did not exist this morning. I traded PayPal myself today, so I have some of my own illustrations that I forgot to remove before the video. All right, so all that to say, we'll start with PayPal. You can see PayPal, it's right on your screen here. Let me introduce session breaks into what is the 10-minute time frame. So these levels are built on the 10-minute in terms of looking for candle confirmation to either the upside or the downside, at which point Discord is alerted that a candle or a price has triggered, meaning we've gotten a 10-minute candle close above or below a certain level that we are looking for it to do so. And that is a signal for you to put on the chart and look for a proper entry into a position potentially. Not all alerts are good, as you'll see with SPY to both ends today, but they are hopefully signals for the potential for a trade in some fashion, whether it be a quick scalp, so a 10-minute, 5-10-minute trade, or whether it be more of a day trade where you're able to sit in it for several hours like we did PayPal today. Okay, so with that being said, these vertical lines represent a delineation between each session. So all of the candles in between are 10-minute candles, so they represent 10 minutes of price action for the entire day. So this is yesterday, this is Tuesday, this was Monday. So all of this to the right here, on the right of this vertical line, is today's price action. I'll just zoom in a bit. You can see coming into the day, I had this dotted line. I didn't want to make it super prominent, but price was working through a series of lower highs yesterday, following yesterday's high. So right here where my cursor is yesterday's high. We have a series of lower highs all day into the end of the day before price pushed lower. So PayPal tried to make a move in some capacity yesterday above the late Tuesday high, but was unable to do so, pretty much as a byproduct of the headwinds of the overall market, as yesterday was a very nasty day, especially following the Fed meeting. So what that did was it put price near a very interesting spot, which is this thick black line here. And to exemplify this, I'm going to put on the 65 minutes so we can see how important this thick black line is. And essentially, it represents trendline support from this December 6th low. So when price, or as prices tried to bottom, following the really harsh gap down in the beginning of November, proceeded with a bigger move to the downside, price has created a series of higher lows, as it did here in late December, at least giving us one reference point between that entire day as an area of support, potentially. So that is the intent with the thick black line, and that is exactly where we put our trigger to the downside, being 185. So 185, the rationale was really just losing the trend line, but if you look left, 185 has also acted on a pivot on the 65-minute time frame. Here you can see it was this bunch of support when price initially fell to that level. Then it acted as a pivot to both ways as price tried to figure out where it wanted to go, and so on and so forth. So that was the intent there. Now let's go back to the 10-minute and let's see what happened. So today you can see right away, noticeably on your screen, is this big igniting candle. Price, and that's the first 10-minute candle of today's action. If you pop on a lower time frame, you can see that it was a big igniting candle on the 5-minute and then the 3-minute. We have what a lot of gap traders consider to be a gap down and a range break. So basically on the very first, some use the 1-minute, some use the 3-minute, but on the very first 1 or 3-minute candle, depending on how you're trading it, we have a gap down below yesterday's close. And then this 1 or 3-minute candle, 3-minute being obviously higher conviction, closes, or is pretty much a full body candle and closes back above that close. At which point I know a lot of gap traders like to get long for a move to the upside. And you can see that was quickly followed by a 4-point move, which is a huge move for PayPal had you caught this really, really early. But anyways, all that to say, what it did on the 10-minute was leave a huge igniting bar that ended up closing through our trigger to the upside. Our trigger to the upside was yesterday's intraday low that price lost at the end of the day, and confluent with that 189, 190 psych support level. The real trade, though, what we were really looking for, and obviously is very challenging to time, was a break of this trend line, which seems to probably be a bit hard to see. So I'm going to remove the crosshairs behind, but a break of this trend line from yesterday's high, as I mentioned at the beginning of this video, this series of lower highs. You can see on this 10-minute igniting bar from this morning, price tested it and wicked above it twice and was rejected, faded, got back below the trigger, and then got back above. So we had a little bit of a fake out here this morning. You get an alert in Discord, you pop it on, you notice that price is triggered above our upside trigger. So then we say, okay, what's price wanting to do? Hopefully you've already drawn out this trend line over top and noticed, okay, price is having problems here. Let's see if, considering the magnitude of this candle, let's see if price can get above before we put on a position. Obviously, that did not happen. So fortunately for me, I did wait and have the discipline to see how price wanted to do here. But obviously, that is a benefit of creating these levels and knowing that that was a big spot for price to clear. And in which time price pulled back, created a lower high, and then pushed higher with the market, gave us two 10-minute wicks above our trigger again, and then finally triggered again, which provided the true trade as the 10-minute candle following went on to break this trend line and close above it, and that is when I put on an entry. And then from there we had about a 4 or 5 point move to the high of the day, and you can see price used our levels for the most part pretty well. We have a bull flag here, that's what I had drawn initially, and then sort of a bull flag, another one here as it works through the uptrend. And you can see here on the 10-minute, the whole time it's holding above the 80 EMA on the 10-minute, well above the 21 EMA. And then as you're trading this, say on a lower time frame, it traded above both really all the way until this intraday low here before price went on to go higher. So there was really no reason for you to waver once price broke this trend line. But regardless, however you played it, whether you entered on the initial 10-minute candle close above, which is what the percentage gain is calculated on. I did not calculate the percentage gain based on this candle because it would have been much higher had I done that. But I did it on this candle because that is what Discord announces. Even if you had done that, you had held through the drawback, which maybe you likely wouldn't have because that was pretty bearish signal. I'm sure if you pop on, we see how the volume was following that. Wasn't that big of a harsh volume sell following that, but that is something that would certainly be concerning. But what I'm trying to say is, it still provided the potential for nearly a 200% trade had you bought here, held through the drawback, and finally got that breakout to new highs. So PayPal was relatively strong today with the market. Obviously, it pulled back at the end of the day with everything else, and we will see how that unfolds going forward. This 195, 200 area is a big level of supply overhead to get through. SPY, sideways action off the lows, and just gave us two false triggers, unfortunately. Barely on the first one. So we have, let me introduce session breaks here again so we can see the start of today's. Oh, did that work? Hopefully, maybe. Yep. Okay. So we can see our level to get to clear today was 470.03 to be exact. It was the late day high that price tried to get above in the last 10-minute candle, and it was just below this area of support that price had lost. So price was going to go ahead and get above that. We were going to attempt to get long, and then our trigger to the downside was 466.10, which actually goes back in time. I knew price was opening relatively flat, maybe on a gap down, so I put it a bit lower than yesterday's close. I put it at this area of potential support back here on the 22nd of December. I used the low of this candle to be exact. And in hindsight, I should have used a bit lower because basically what happened was we got a 10-minute candle close at 466.09, which gave us a trigger to the downside and on the 10-minute time frame. And then, so we're talking a penny below our trigger, 466.10. And then at which point you pop on the chart in Discord and you see that price had already gotten below that low. and attempted a nice hammer on the 5-minute chart here and back above our level. So this is a clear indication that, hey, we may be right at the cusp of support here. The level may be kind of off. It may not be as low as it should be, and price might want to reverse after undercutting that low. And sure enough, it did. You can see that was followed by a push to the highs of the day eventually, which went up and tested our 470 level. We had a rejection here. Price pulled back, and then price went ahead and went for it again midday, creating a new daily high above the morning high, and gave us a 10-minute candle close above, but just didn't want to go any higher. Had no business or no interest getting anywhere near 471. I think we just hit a high of 470.81, so we're about 20 cents off, and so a lower high from this late day high yesterday, and price then faded back below right away our trigger to the upside. So it never, I guess, that 5-minute candle close above, and then we had a fade below. We had an attempt to get back above, rejection, and then a fade. So market really didn't want to go anywhere today. Every bounce was sold, as you can see here very visibly on the chart, and really for the most part every dip was bought until the end of the day. So it was a very just indecisive day as bulls and bears battle out what was a very harsh pullback yesterday following the Fed meeting. And I mean, the meeting itself wasn't any different or much different than what we had heard from the presser from Powell. But as they say, we have the initial reaction to news, we have the day after, which is the reaction to the reaction, and then we have the day after, which is the true reaction. That would be tomorrow, and we will see how that unfolds. Trade desk TTD was our remaining ticker to the downside, and as I mentioned at the beginning of this video, it really was just a very quick scalp. Only about 30 minutes of pushing lower, if that. And you can see here our trigger to the downside was 78.25. All of today's price action is right here. That 78.25 was just simply yesterday's low. If I go back in time here on the 65-minute, I want to just show you what is possible, or really what the rationale was behind having this this level or this chart in particular. TTD is not as common to be on the day trade list. It's this huge gap here from November 8th. So we have a gap that goes all the way down to about 68.50 from November 8th. This was a power earnings gap. Price gapped up all the way to 84. So there's a huge gap here. It's about 10 points a gap at least that could have potentially been filled today had price gotten below yesterday's low. So they filled the gap a little bit more today than they did yesterday. But not quite all of it, obviously, as you can see the market bounce. So that being said, that was our level to get and stay below. The first 10-minute candle of the day, which is this red hollow candle, it gapped below the trigger, but then got back above. It wicked at this downtrend from Monday or Tuesday's high, which is what we were looking for price to break to get and for price to get and stay above. So to break and stay above to get long. Obviously, it did not do that. We had multiple rejections in the first 10-minute candle, and then the second 10-minute candle actually gave us a 10-minute candle close below our level to clear. You get a signal in Discord, you pop on the chart, and you see that the following, whether you're on the 5-minute or at least the 5-minute, maybe down to the 3-minute, but initially on the 10-minute, we have this indecisive doji here. You can see on the 10-minute, which is reflected by this inverted bearish hammer, which was stayed inside on the 5-minute but still closed below the trigger, giving you providing more credence that this was in fact going to move to the downside. And then from there, price ended up pushing to the low of the day right above our 75.50 target. The low of the day today was 75.70, at which time price tried to then turn around and bounce. So if you're using the targets, you're scaling out at targets, you're being mindful that these targets are potential levels of support. So they are only targets as good as price allows them to be. So if price wants to mount a reversal off of them, take them as support and use that as an indication to get out of the position. As you can see here, price wicked back above that 76.50 level twice after it lost it, and getting to our 75.50 level, and then finally got back above on a pretty big bar there on the 5-minute, to then tell you that this was at least going to attempt to reverse. And because today's Thursday, we can't have positions go against us on Thursday, really in general on day trades to begin with when you're trading same week expiration, but especially today because we're one date until expiration, so we're trading tomorrow's expiration. So today is a lot like Lotto Friday in that we have to be quick and price has to either move in our direction or not. We can't have it trade sideways, and we certainly can't have it go against us. I hope this helped, guys. I hope you had a good day. Thank you for watching, and thank you for your support. If you have any questions, please ask in the video itself or ask in the Twitter thread. Thank you.